Welcome to Fisher Webinars. The following is a recording of how declines in printing and writing might affect specialties, originally presented on Thursday, October 23, 2014.
This title, how declines in printing and writing might impact specialties, is a very, very broad topic. And hopefully what we'll try to do today is really just touch on a few ways and a few mechanisms that declines in the printing and writing market might impact specialties, and really set you to thinking and inspire you even around some questions you might be able to ask in order to analyze the industry in new and perhaps interesting and different ways going forward. In terms of the data and charts you'll see in today's talk, nearly everything we'll cover comes from FisherSolve, our business intelligence tool developed for the pulp and paper industry. And as I said, this is a pretty broad topic, but if there's one thing I hope you leave with is a concept of maybe second and third degree effects. And in order to illustrate this point, we've got a row of dominoes. Now in our industry, I think we're pretty good at understanding the trends and events that directly impact our companies, and certainly the decline of printing and writing, the secular decline in end markets for printing and writing is probably fairly well observed by printing and writing companies. What I want us to think about as we go through today's talk is not only how a certain event or an industry trend might impact one segment, but how might it impact the next person down the line. And if we extend this thinking further, how might the reaction by the second company, in this case that third domino, impact the person in the back of the line. In this case, we can see in the illustration that the domino in the back of our row will be impacted by the first domino that falls, and in some cases in ways they didn't expect. So again, hopefully as we cover today's conversation, I've been successful, I think, if I set you to thinking about how you might be able to analyze the potential for these kinds of impacts on your own business. Let's start with just a high-level overview of the industry to level set our talk today. This is a chart showing total global paper production by major region worldwide from 2007. And as you can see, it's still a very large market, and it is in fact growing. Today there's about 450 million tons of paper production of all kinds worldwide. And if we peel the onion a bit, we can observe what probably most of us on the call already know, that nearly all of this growth has occurred in Asia Pacific over the last 6 or 7 years. And to put that sort of in numerical terms that might be more impactful, over that time that region of the world has added 80 million tons of production. In context, North America today is about 97 million ton market, Europe is 124. So the take-home message here is just over the last 7 years, Asia Pac has added an amount of production that nearly equals the entire North America market today. Very robust and rapid growth. Most of that growth is coming into packaging grades. These are things like container board, folding box board, craft papers, etc. And as you can see, also growth in market pulp, tissue and towel, and some specialty grades. Some of you might be a bit surprised by the small size growth in specialties, and I think it really sort of begs the question, why is that? And in order to understand specific market trends that impact your given company, of course, you need to have a little bit more detail than we just saw. So what we've done here is shown the compound annual growth rate for major grades by region, and hopefully what you'll see is that it's very lumpy. That is, some regions are experiencing widely different growths than others, you'll draw your eye to North America, where we've essentially seen flat growth in specialty grades. And that's because while it is true some specialty segments are growing, particularly things like food packaging and greaseproofs, other segments such as security papers are facing some pressures and are in fact declining. And if you think about the first part of the subject of our talk in terms of newsprint in printing and writing grades, I think none of us are surprised that newsprint is essentially facing broad secular declines. There's already machines in China that have announced that they're going to consider converting out of newsprint, which I think is probably a sobering point in its own right. In terms of printing and writing, we still saw growth in Asia-Pac over the last 7 years. As you can see, for the most part, particularly in the developed world, there has been pressure for declining production. What's driving it? I think on the newsprint side, most of us know this is a chart for the USA of advertising dollars and change in spend. There's an adage that advertisers follow eyeballs, and we know as e-media substitution has taken hold and disrupted the newsprint market, whether it's people getting their news content online or using Craigslist, which is free for classifieds. Eyeballs are moving away from newspaper, and that of course is driving pressure in that market. The same type of pressure is impacting printing and writing markets. And the chart you have in front of you is put together by a partner firm of ours called System Thinking Europe. And what the chart shows is the change in annual demand for printing and writing grades in developed countries as on an assumption of how much of total print demand is substitutable by e-media. I know there's still a lot of debate in terms of just how much e-media will be able to substitute for printing and writing grades, and whether you're someone who's on the 60% substitutable side of things or 80%. The main take-home message here is we're still in the middle of this this evolutionary change in terms of the degree of impact, and our expectation is there will continue to be significant demand declines moving forward for several years. When we think about the prospects of printing and writing growth in developed markets, it always hinges very heavily on the per capita consumption. So we'll need to make some assumption on, you know, when China and India get to where they're going to go to in terms of their economies and wealth per person, what will that terminal consumption rate? It's critical because we have such a large lever. You've got, you know, 1 billion people in both countries, and so the differences in consumption rates can have incredible impacts in terms of the overall usage of paper. And the way I want you to think about this is we'll draw an analogy to how people adopt new technology. So the charts you'll see in front of you is data in terms of landline telephone subscriptions per 100 people for both developing worlds and developed countries and developing countries. And as you can see, of course, landline telephones in the developing world penetrated at much smaller rate. What's interesting is, you know, during the period of large economic expansion, there really wasn't any growth. And what happened is probably what most of us kind of rationally think should happen in our gut, and that is to say that folks won't, in developing countries as they grow wealthy, aren't going to necessarily and really aren't going to go through the same evolutionary cycle that we will. So they're you know, probably not en masse going to adopt the daily morning newspaper for 5-10 years and then move to mobile. They're rationally are going to adopt the latest, newest technology that provides the most utility and the value. And so because of this phenomenon that's well measured, we really need to be pretty careful in how we're predicting the end consumption for some of these countries, because again, you have such a large lever in terms of population, and so small changes in consumption rates can have big outsized impacts. And it could be we're already seeing some of this in terms of the propensity to build new machines. In this chart we have production for printing and writing grades by year the machine was built for China and India. So the way you ought to read this is to note in 2010 and 2012 there was about 3 and 3.5 million tons respectively of new printing and writing machine production that went in. We like this metric at Fisher. One of the reasons is we're assuming an aggregate, the desire to put new capacity. You're essentially aggregating the kind of combined wisdom of folks in the market, and in some cases it can be a pretty good forward look in terms of expectations for future growth. And what you'll observe is a very significant drop-off starting in 2012 in terms of new production that went in. If you say, hey Matt, isn't it true that paper industry works in cycles, you would be right, and it could be what we're seeing is just that, another part of the business cycle. One way we might test this theory is to think about the amount of production that has gone in as a percentage of the installed base. And when we do that, in this case, we've shown number of machines in the so-called BRIC countries. So this is Brazil, Russia, India, and China. And we've broken it out by major grade. So these are the machines under construction out of Fisher-Solve for these BRIC countries. And as you can quickly tell, predominantly the investment's going into tissue and towel and in packaging machines. When we measure the production that's going to go in, that's under construction, as a percentage of the installed base, I think the picture becomes a little bit more conclusive in terms of what companies are thinking about future prospects for these markets. Whereas tissue and towel rate of machine construction is much higher, 8.5%, probably in line with where we think GDP and wealth growth is occurring. We can clearly see that printing and writing growth as a percentage of what's already installed is much lower. And so therefore, one has to wonder, is something else at work here? So now we're going to switch gears a little bit and think about how the declines in printing and writing grades might impact the specialty markets. In order to answer that question, I'm going to say a good starting point is to think about what it takes to make specialty grades, really do a variance analysis or gap analysis between how printing and writing machines look like specialty machines and how might they be different. We're going to do this. We're going to start off with Furnish and then move to the equipment side in subsequent slides in this presentation. Let's start off with Furnish. So here we've got globally all machines making printing and writing in specialty grades, their Furnish production and the mix. And quickly what you can see is both are heavy users of craft. Switching to the equipment side of things, as we walk from the head box to the end of the machine, we can see the mix of types of head boxes are very similar in these two grade groups. These are number of head boxes worldwide for each major grade. Continuing our walk down the front of these machines, the majority in both cases are Fourdrinier machines, and as you can see, some use twin wire gaps and hybrid top wires as well. Now we're at the press section. Majority of both types of machines have roll presses. Continuing our walk, we can see that both types of machines use size presses. As you can imagine, the specific type of size press is fairly varied, but somewhat equally varied in both cases. Both printing and writing and specialties machines use coaters, predominantly blade coaters. And they both tend to have hard and soft nib calendars. Let's switch gears to basis weight. So we're at kind of finished our walk on the machine, and oftentimes a barrier to entering a new market can be basis weight. It is true some machines, when built, were tuned to run a specific basis weight range, and so what we want to do is compare now how similar the basis weight ranges of these two groups of machines are. So what I've done is shown for each machine in the world making both printing and writing and specialty grades their basis weight range, and this is on a grams per square meter basis. What you should be able to see is there's a fairly good band of basis weight range capability that's common among both machine segments. You may note that specialty machines tend to run lower basis weights than printing and writing. Our thinking is that's probably more a reflection of the markets they're currently in. Some specialty grades, particularly food and end uses, tend to be lower basis weights, whereas some printing and writing grades tend to be a little bit higher. In terms of machine trim and newness, here is a chart showing each of those machines. On the x-axis is the trim of those machines. On the y-axis, the vertical axis, we have technical age of these machines. We calculate technical age by taking the weighted average of each major unit operation on a paper machine. As you can see from this chart, specialty machines tend to be narrower and indeed older, whereas printing and writing machines tend to be wider machines and with newer technology. Okay, so so far we've talked about assets and the furnish of these two groups. Let's talk about costs, costs of production. And so in front of you is a cost curve of both specialty and printing and writing machines worldwide. This is a little bit of a different cost curve than you may be used to. So within FisherSolve, we have the capability to strip out various costs and roll up cost curves at multiple levels in the mill. And for this analysis, I didn't want to have all costs on the machine, and I didn't want all costs on the machine because in some cases chemical costs can vary quite widely depending on the end market. So for example, someone making greaseproof papers requiring fluorochemical treatments is going to have a widely different chemical cost than someone that's making a laminating grade that doesn't require as much chemicals, or someone making a printing and writing grade that requires fewer chemicals. And so I didn't want to have the cost a reflection of the markets they chose, but really as a reflection of the cost to get a sheet structure to the winder that's something like 90% cellulose and the remainder water. So really, what is the base sheet cost, if you will, to the winder for these groups? So what we've done is we've stripped out chemical costs, overhead, and credits, and that's what we're left with. If I split these two curves into just printing and writing mills and specialty mills, it becomes fairly obvious that they do have drastically different what I'm calling base sheet costs to the reel. If we draw a line through the midsection of this printing and writing cost curve, we can see that in fact nearly 1/2 of the world's printing and writing production would fall in the first quartile of an average specialty machine. So certainly we can say and conclude on a base sheet basis, these printing and writing machines ought to be very competitive with specialty machines. Let's look at carbon footprint. We calculate carbon emissions for every mill in the world, and we do it on a carbon dioxide basis in terms of tons of CO2 per finished ton. the way this chart is laid out, on the left we have the printing and writing grades by region, Europe, North America, Asia, and then the non-highlighted bars are the specialty grades rolled up at the regional level. So these are all producers in those regions rolled up by their major grade. In general, we consistently see a same trend across all segments, and that is Europe tends to be lower in carbon intensity than North America, which is in turn lower than Asia Pac yet. The other trend here is that printing and writing mills tend to be lower in carbon emission than specialty producers. This is important because we believe carbon has and will have a cost. Indeed, it is being regulated in some parts of the world already. There is talk of additional regulation in countries even today, and so going forward we think it's going to be something that mills have to consider from a cost to produce perspective, if not a sustainability in market perception perspective as well. So, even at that high level, we've seen that there's probably a lot of printing and writing machines that look like specialty machines. And so it shouldn't be a surprise to us that, in fact, there are printing and writing machines today already making specialties as part of their mix. And we'll show that in a few cost curves coming up. This cost curve is North American release paper. This is Q3 of 2013. I've highlighted a few printing and writing machines. If we feed forward 6 months or so to the first quarter of 2014, we can see I've still highlighted these printing and writing machines, and hopefully you'll note that, in fact, two new machines have come into the marketplace. And these are low-cost wide machines, for the most part. In grease-resistant paper, this is Q1. We can see 2 new entrants into this particular marketplace. In fact, in China, in some cases, they're making specialty. They're building machines with the intent to run both specialties and printing and writing grades at the same time, and these tend to be very wide machines. In this case, this is coated one-side label paper machines worldwide. I've colored the bubbles by region. The size of the bubble is the production off the machine. And so you'll note quickly that these new machines that have gone into Asia, specifically China, tend to be very wide and new and highly productive machines relative to other parts of the world. Within FisherSolve, we're able to ask the question, show me all the machines show me all the machines in the world making printing and writing grades, and then I want to strip out the printing and writing grades and just show me what's left. And we've done that here with a specialty filter, and what you'll see, 2 things. One, there's quite a lot of production already made on printing and writing machines, about 8 million tons. That's just north of 35% of the global market for specialties. The second thing you'll see is, although there are some big drivers here, C1S label, carbonless, release, thermal printing, etc., there is a fairly wide mix of other grades, some grades which oftentimes we consider as very small niche boutique specialty segments. And this is where we come back to the concept we talked about early on. So as we see these printing and writing machines under secular decline and under pressure, it's rational for them to look for other markets. Some of these could be specialties. We've shown how printing and writing machines, in fact, are already making specialties, in some cases the larger segments. Now I want to walk through a mechanism that brings us back to this domino picture and really illustrates how it might impact even smaller players. So this is the same chart we saw 2 slides ago. In this case, it's for North America only. As you can see, North America, this is specialty grades made on printing and writing machines. We've got release papers, C1S, greaseproof, carbonless, etc. Let's take the greaseproof, grease-resistant market. These are for these are products for things like hamburger and sandwich wraps, popcorn bags, etc. If we look at a cost curve of global greaseproof costs, we can see that integrated producers, some of which are printing and writing machines, tend to be lower cost. And if we come back to North America and look at the market by machine, what I've done here is shown each machine's production, the mix of its production. That's the different colors, means different grades they're making as part of their portfolio, and the line is the width of the machine. We can see there's some big machines, wide machines, making an awful lot of production, and then as common in specialty segments, there's sort of a host of mini machines that are on the smaller side, making lots of different niches. So let's walk through this mechanism of how printing and writing machines, in this case coming into greaseproof, could impact other segments. Right here I've highlighted even 3 machines that are smaller, running 100% greaseproof. We can imagine as printing and writing machines come into this market, these folks ought to be impacted first. We'll show how some others might be impacted as well. So let's show that in terms of as folks enter the greaseproof market. For some of these folks that are making 100% greaseproof, they're going to look for other markets to enter, and those other markets are probably going to be other markets they can compete in with a small machine. And so we can imagine how as printing and writing folks come into the greaseproof market, those greaseproof producers start looking for other markets to make themselves. And these rationally are probably going to be markets they can compete with, and those could be smaller markets such as medical, wrap, etc. And the way that starts is with pressure on the highest cost machines. Okay, so this is back to that cost curve. We've shown the low cost new entrants, the very high cost producers. As new entrants come into the market at a rate that exceeds end market demand, we would expect high cost producers to get pressured. As that happens, we would rationally expect to see some of these folks under pressure look to other markets. And we see it here. So in this case, we can have a thought experiment where someone's greaseproof market is under pressure. They look at medical wrap or interleaving paper, laminating base. And this, of course, then influences the producers in those marketplaces. So in addition to secular declines in printing and writing grades, what else might trigger some of these conversions or new market entry? Well, I got 3 points here to think through. One is growth in what I'll call complementary specialty grade segments. So when I say complementary, I mean products that are that have different market applications but look close enough such that they can be ran on a machine, on a production schedule in a way that limits transition costs. So this could be things like similar basis weights, bleached versus unbleached, functional chemical treatment, countering, etc. So we can imagine as various segments continue to grow in specialties, to the extent some of those are complementary to each other or similar enough in grade design, this would make it easier for a wide, big new machine to enter the market. Also, we're seeing continued improvement in machine control systems. Increasingly, big machines are getting good at transition. Some of this is certainly because of technology. Some of this is probably because of human nature. So when you're under pressure, when you're forced to make a decision or forced to get better, you often do. And so, we're seeing machines that are getting better at making a wide variety of grades from where they were, say, 5, 10 years ago. And I think the third trigger might be specialty industry margins themselves. So we could expect as margins in a given segment increase, this therefore increases the attractiveness, the economical attractiveness of entering that segment, What this means in simple terms is that most of these specialty segments will have, or some of these specialty segments will therefore have what we call a ceiling price. And a ceiling price is really that price point that triggers new entry. To illustrate that, I'll use a linerboard example for North America. This chart is from a study we did several years ago. And the purpose of the study was to answer the question, at what price would we expect to see new entrants convert into the marketplace out of printing and writing? And what we discovered was that there is a trigger price in the market where you will start seeing positive net present values for these conversions. And the cost of these conversions both being machine, capital costs, rebuilds and the like, and also marketing expenses. Once that threshold is reached, volume ramps quickly. So the desire for new entrants to come into the market ramps fairly quickly, and that's because, of course, as the price increases, margins increase. This tends to be a thin margin industry, so it doesn't take much to start adding on more projects that, quote, look good. We would expect the same phenomenon in specialties, and so back to the ceiling price concept, therefore, many of these segments will have a price at which point it just looks good for other folks to come into the market. Okay, so we've looked at a few ways in terms of how printing and writing grades might enter the specialty markets. We've gone through a mechanism by which market entry into one segment could impact other segments. Let's think about a few strategies either type of producer, either a specialty or a printing and writing producer might undertake. To start this off, we'll use a construct here that many of you might be familiar with. This is adopted from some work from Michael Porter and also some folks who wrote a book called The Discipline of Market Leaders about 15, 20 years ago. And the thesis here is that companies in the main have three choices in terms of their main strategy. Either it's a technology focus, customer intimacy or customer closeness focus, and or efficiency. And most of us can think of efficiency as low cost. Usually specialty players sort of reside in this technology and customer closeness, customer focus type of strategy, whereas most legacy printing and writing folks, incumbent printing and writing folks, are going to be at this lower cost, larger machine, larger scale type focus. So if you're a low-cost printing and writing machine entering some of these markets, leverage what you do well, right? So obviously serve large markets first. We talked about scanning the markets for those products that are complementary. So if I can make this grade, is there grade B, grade C, grade D that looks similar and lets me build better runs, lower my transition costs? I think the third point is very important, and it's important to not undervalue or underestimate the requirement for good market understanding before you enter the market. And so certainly that means doing the analysis and the work necessary to have a very good understanding of the market, understand why you'll be successful, why customers will buy from you, and also consider the sales ramp. So in many cases there's a trial process, there's some process of observability. Once you get the product in the market, other folks might see it. That all takes some amount of time, and it should be considered in your planning. Additionally, in some cases, if it looks like you just might lack the marketing resources or expertise to get into a market, inorganic growth could be a very rational solution. So rather than investing to get the market expertise and the field expertise and the boots on the ground, so to speak, you go out and buy it. From a perspective of a specialty player, focusing in those technology and customer focus areas. One thing you might consider doing is become even more fragmented in terms of your end market. So more products serving more very narrowly defined application segments, if not even at the customer level. And the name of the game here is do everything you can to kind of put as much what I'll call intangible distance between you and someone else. So to the extent you can invest in things that aren't iron and steel, those are difficult to replicate. So the customer care processes, the second bullet here. Most specialty folks I've heard will say, their strategy, their focus are really good with customers. They're good with end markets. Sometimes it's sort of the next step beyond that is making sure your customers know that, right? So it's one thing to say we have a certain value proposition in a marketplace. It's a wholly another thing to take your customers, put them in a room, and ask them, why do you buy from supplier ABC? If their answer is different from your answer, that's a risk. And so one thing you can do is you put in place business management processes that are formal, that are written down, that help you to get caught doing something good. So to the extent what you're doing in terms of your customer focus activities saves them money, helps their business, I want to get that documented and acknowledged by the customers. And certainly what that does is drive up the switching cost to a new entrant, because the customer will rationally say, yeah, you can make the product, but you can't do A, B, and C, which I'm getting from my current supplier, and it's worth something to me. And the last bullet is kind of the flip side of the inorganic strategy from the previous slide. And in some cases, it might make a lot of sense to say, if our focus is in customers and R&D and technology, we don't want to run some of these older, narrow assets anymore. We'll go ahead and toll manufacture to bigger machines. And we'll focus on the areas that we deliver value on, this customer focus, technology, and we'll let other folks focus in the areas where they drive value, which is scale and efficiency.